Hey, what is going on, guys? Bennett here with EnhancedInvestor.com, bringing you another quick educational clip. We're going to be answering a question on the topic of short selling. We've had a lot of people asking us just exactly what short selling is. Some of the new traders who are just unfamiliar with it, unfamiliar with the impacts that short selling has on the marketplace overall. So let's take a quick look at exactly what short selling is. So short selling involves borrowing shares from your broker, immediately selling them into the marketplace, and buying them back at a later date for a reduced price. That is obviously your profit. So essentially, when you short a stock, you are betting that the stock or commodity will go down in value. Some of the pros of short selling. Obviously, you're able to profit on both sides of a stock or asset's movement. Sometimes it is easier to see the top than the bottom. Well, I don't necessarily agree with that one. I would definitely be careful with that sort of thinking. That type of mindset can definitely lead you potentially to not cutting losses when you should, and things of that nature. Some of the other pros: it allows you to be a multifaceted trader and adapt to the market conditions. Now, this is absolutely the reason that I started short selling in general. Essentially, when I started trading, I was a long biased trader. As momentum kind of shifted, as things got a little bit choppier in the momentum world, kind of the small cap, low float stocks that I generally was trading, I started to get into short selling. Finding a broker to begin shorting with can also be, a little bit difficult as well. But that's the reason why I started venturing into shorting, options, futures, forex, and things of that nature. So what are some of the cons? Losses can be endless if improperly managed. Now, I know this is an extreme example. However, there was a gentleman who entered into a short position, rather large short position, on a biotech stock that was nearing FDA announcement the following day. He held the position overnight, went to bed with around $32,000 in his brokerage account, and he woke up with a $100,000 margin call. His account was now $100,000 in the red, and he owed E-Trade, that difference there. Again, a very extreme example. The stock gapped up on FDA approval news. But then again, it just goes to show you, when you are shorting, you definitely need to be careful and, apply your risk management skills and be a little bit more cautious than when you're trading on the long side. So market manipulation, this market maker manipulation rather, that is definitely something to look out for on, moves where you see continued volume and you see these very very inconsistent moves, or moves to the upside followed by these big corrections, and then you see this next big move to the upside. A lot of the times with even GLYC, that was a perfect example of where you can see market makers squeezing out shorts, as we like to refer to it. You see these squeezes to the upside. Often you're going to hear us refer to the term short squeeze, which we're going to be getting into here in just a minute. Some of the other cons now: it requires a margin account. Again, something to take into consideration. And shares can really be hard to find for some of the stocks that we've been trading. A lot of the low float stocks, you're not going to be able to find shares to short, with your typical TD Ameritrade, Fidelity, E-Trade, those sort of brokers. You're going to need a premium broker, or there is another option, although they are located in the Bahamas, a group called SureTrader. You can utilize them for short selling. That's who I use, believe it or not, to short stocks, only because of the fact that they have actually a rather decent inventory, and I'm able to find shares to short on low float stocks that I otherwise would be unable to short. So let's take a quick look at an example. IMNP. Here we had an entry at 475. So we shorted on the overextended technicals in combination with the rejection of a technical resistance level, in this case the 200-day moving average. So there's your why. And just taking a look at this, guys, we saw this move in the pre-market on news. Out of the open, this is our first 5-minute candle. I'm here on the West Coast. Market opens at 6:30. Just looking at this candle, you can see it's a very, very bearish candle. Again, on a red candle, and on any candle rather, the low of the time period is the lower shadow or the lower wick. And in this case, we didn't even have a lower shadow. The close of the period was actually the low of the period of that 5-minute. So here on a red, obviously we have the open at the top of the body and the close at the bottom of the body, and the high being this upper wick or upper shadow. This happened to be $5. So not only is $5 kind of a psychological price level, a potential resistance point, it's also, in this case, actually a technical resistance level, which happens to be the 200-day moving average, which has been acting historically as an area of significant resistance. So that was the reason we entered into this. And it's not as if we went into the test of that moving average with light volume. We had a lot of momentum. If we were to look at this on the 1-minute time frame, we had a lot of momentum going into that $5 test, and we just saw an immediate rejection. So we entered in a short position pretty much immediately off of that rejection at 475. I entered for 1,000 shares using SureTrader, was able to find shares to short. IMNP had a 10 million float at the time. Price action moved all the way to the downside. We actually called a 340 potential low to cover a short position at, given the previous 340 we had support that we had seen actually in the pre-market. So again, guys, when you're selling short, you're essentially, again, you're borrowing shares from your broker. You're immediately selling them into the marketplace. In this case, we're selling shares at 475, and then we come back down here and we buy shares at 340. You can see here, previously, this right here is our 200 moving average for IMNP. We can see historically, and even if I look back further, we saw resistance off of that moving average. So that told me, going into this position, I had some confidence in that fact that we have never been able to break above that 200 moving average. We had a lot of momentum going into that. It was also kind of a psychological level. And as you can see here, the selling pressure came in heavy, moved the stock all the way down to a 341 low on the day, 1 cent off our profit target price. So what are some of the other, things to definitely kind of look out for and consider? What are the impacts that short selling has on the marketplace? Well, remember, guys, when people are shorting a stock, or anything for that matter, they're selling shares, they're selling contracts, whatever it is, they are selling into the marketplace. And when we have an overwhelming, when selling pressure overwhelms our buying pressure, we're going to see these moves to the downside. We're not going to see these positive float rotations, with buying volume, moving price action up. We're going to see people taking profits. We're going to see people a chain reaction essentially as the shorts begin to pile on. And there was actually a lot of short activity on this particular stock. So now on the flip side, when a short goes to cover their position, they're buying shares. So you're buying shares back to cover. And a lot of the times you will see short squeezes where you will have an overwhelming amount of shorts trying to cover their positions at a particular support level, or perhaps there was a news catalyst that came out, which is exactly why we take into consideration the amount of shorts on a particular stock when we're looking at stocks. In the morning, we're prioritizing our watch list based on volume. We're looking at catalyst and the potential for those catalysts to not only create this buying momentum, but also what's the potential for shorts to have to cover here. So you can definitely kind of take advantage of shorts and the impact they have on the marketplace if you watch out for those short squeezes and you're able to get in on the momentum. In fact, if we saw a very significant move on a short squeeze here, it was extremely shorted, and we didn't see shorts who had confidence in holding beyond those 341 lows, you essentially could have entered a position short here at 475, covered your position at 341 or 345, and flipped to the long side and made profit as the other shorts began to cover and people began to also just come into the stock and begin buying it as they saw that short squeeze in effect. So anyways, guys, I hope this helps. I hope you enjoyed it. Look forward to seeing you guys next time. And as always, guys, don't forget to visit enhancedinvestor.com. Sign up for your 4-week trial. Join us in live chat where we cover anything from swing trading, futures, forex, long-term investing, momentum trading, and more. Hope to see you there.